We're going to talk oil, and we are going to talk Twitter, too. The other reasons that stock was up. Here to help the investment pros, Jim Frischling, founder of NewOak Capital, is back with us. Great to have you, Jim. All of our reports. Now, here's the thing, and by the way, Nicole talked about volume. This was not your run-of-the-mill volume. Here's the thing, though, Jim. We talked a few shows ago about that V-shaped rebound in the market. Last year, every time we had these sharp drops, we had sharp recoveries, and a whole lot of money was made. Do you think we're setting up for something like that?
I think so, but I'll tell you, the lead actor, the driver today, and I know we've been talking a lot about oil, but I'm going to add to the oil story in that you really had the supply side. Even Russia and Iran are supplying at all-time highs. You had OPEC, or rather specifically Saudis, reiterating they're not going to cut and they're going to go lower. We joked in the show last week, I'll take 2 barrels for 80. We're getting closer to that $40 barrel number. You also have uncertainty over Greece. So I think the supply side is going to keep oil pressure high and going to keep investors nervous. I do think it'll settle. Leave oil on the ground, prices will rebound, but I think we're not ready for the V yet.
All right, so Jim, here's the thing, though. I like when the market goes down rapidly, quick. I mean, I always think when the market goes down, it knows where it wants to go, and I prefer that it gets there sooner rather than later. I'd rather have down 300 than rather down 30, 10 days in a row. But having said that, it does spook the general public. Where are we right now with respect to it spooking Wall Street?
I think it's only spooking Wall Street very little. And
what if the jobs numbers are dud?
I know it'll be written off as an anomaly after so many months in a row of a big production, and I don't expect it to be a dud. It's going to be a little less than where we were last month, but it's still going to be a 200-plus number. Look, money is a zero-sum game, and right now the talk is how the oil-producing nations are hurting.
Money is a zero? There's
sorry, meaning when you have it, if you have it, I have less.
Okay.
One of us are going to have a little bit more of it, and there are economies that are going to benefit, as we've been talking about the consumer benefiting from cheap gas, oil importers benefiting hugely. So right now the focus is on the countries that are hurting as a result of this, and that's why I think Wall Street's not panicking. It's going to balance out, and I still don't see a better place to deploy money than the U.S. stock market today.
But Jim, it impacts talent.
Jim, are they coming back? Are these deals coming back? Because there was a few stocks that were traded pretty well today, and there are a lot of rumors that have been around, and some going on for 1 or 2 years that seem to make sense right now.
I think the deals are going to come back. I think with the stock market still at all-time highs, that currency, the stock does mean a lot, and M&A activity. However, it's going to be quality over quantity. And I think, look, everyone's motivated by their self-interest, and a CEO and a board that makes the wrong decision and makes a mistake on their acquisition are putting these executives at risk. So I do think there's more conservatism today, despite the high stock prices. Are we going to see deals? Yes, but I'll tell you, a lot more due diligence, and people are a little nervous about pulling the wrong trigger and being held accountable for it.
But over the I don't see Weissman and Coach in the same bracket. I see
Not
Coach
really.
here, Weissman here. But, by the way, it was a $574 million deal, taking on some of the debt and the cash involved.
Yeah, I was going to say, and it was a private deal. To Matt's point, while there were some large public transactions last year, the private equity firms had a huge year deploying capital.
So give me some names, guys. Who may be taking over?
I went big time, and that's probably the biggest risk to my name. But I went Netflix, and my point is the cable business has never felt so much pressure. You got Google, you got Yahoo. I don't think it's going to be Yahoo, and you got Alibaba. So Yahoo indirectly. But I think one of them's going to buy Netflix, and the other one's going to try to create their own streaming content distribution.
I agree. Netflix sometime this year for a $150 premium. I'm with you on that one. My man Wilbur Ross with the worst record here, he's one of the best investors in the last 50 years, and that loss of 22% might actually be a gain of 100, 200, 300%. So what do you think about the whole thing, Jim?
I mean, the most important thing is you can't look at a one-year return, okay? And in fact, people who typically put up a big number in 1 year, I think are often someone who might be at risk the second year. On the activist side, I think activists in 2014 had a very big year, winning more proxy fights, getting more board seats than they ever had before, but their returns were less than the S&P average. So the fact is, made a big name for themselves, didn't deliver the returns.
Household names. Listen, I know it sounds like a pipe dream. Jim, I'll go to you. It sounds like a pipe dream to a lot of people. It sounds unreasonable, unrealistic. But I look at what people wear. I look at how people spend their money, and they can do it.
Yeah, we were just talking about income inequality, and actually I think more about the wealth effect, meaning you look at the debt that some of these lower income folks are taking out. Why? And to actually purchase and going out and buying certain items. So the fact is, I do believe in starting to have an investment plan. Let your money work for you. And the simplest way is to buy shares in public companies.
But the thing is, you don't add to it yet, but it's too oversold in my mind to take this kind of a loss. And Jack asked, will we see GDP drop for the fourth quarter due to energy drop? Well, you know what? Oh, by the way, he wants to know if it can go negative. I don't know that it goes negative, but I think it's probably going to certainly go down.
It's going to be impacted. price of oil and housing starts. Watch it more first quarter, as Heath brought up earlier in the show. I think it's going to hit harder in the first quarter. We're going to actually
about a 0.5% drop in GDP.
But we're going to feel fourth quarter GDP because of these two things.
I'm really surprised.
Again, I think the supply side of oil is in a way in people's mind, but stay calm, as Matt was just highlighting. We're going to see a Fed that's going to actually act much more accommodating than people think. We're going to have a good quarter of earnings, and Friday's job report is going to be a good number.
We should say for